Uh, I was telling Vipul Buck that like we should be taking like a victory lap this week. Like these executive hires at these companies are so fucking hard, and you'd think like a company like Together that's growing legitimately faster than any company I think I've ever seen, at least in the KP portfolio company, it'd be like, oh yeah, like easy. We should just be able to hire any executive. It's going to be a perfect fit. It's so hard. Like anyway, we just gave each other high fives because it's like these hires are so hard, no matter what. It's insane. So I'm excited. How hard is that? Like, how hard is it? Even now, right?
It is, I would say it's one of the most important decisions for someone who's in an executive position. They're doing really well in their career. They have, multiple options. They're new markets, right? So you have to, I'm sort of putting myself in the shoes of someone, the executives we are hiring. There is, you have to kind of figure out all these things. This is the right market for me. This is the right, executive team fit for me. And it takes a little while to establish all of that while, also looking at, this is something that you want to work on. It's going to be, it's going to be a lot of work. It's going to be fun, but it's also going to be a hard road.
Yeah.
So I think they're big decisions and it takes a while. That's sort of how I think about it. It's really worthwhile for me to invest a lot of time in it because it's just, it really changes the company at some level.
How much time, if you had to guess, like now that the company clearly has product market fit, it's working, how much time do you think you're spending building out the executive team? Hiring, interviewing, scoping, calibrating?
I try to roughly spend 25 to 30% of my time on recruiting, and that's, executive recruiting. I generally do the last interview with everyone we hire. So it's quite a bit of time.
Yeah.
And I think of it as, I can really help to set the culture, the bar. And sometimes I can, it's exciting for candidates, even if they are, not executive candidates, to know what exactly the CEO is thinking about the company, what they, how they see their role in it.
Yeah.
So it's a big investment of time and it's very important.
It makes it even harder. Like I remember you and I sat down and I didn't ask you anything about the business. I just asked you about like the qualities and characteristics of what it's like working for Vipul at Together. And like the criteria that you outlined were like pretty intense. Like it was like, there was quite a specific list of things that these executives need to embody at your company. Like, what did you say? I wrote them down. One of them was being able to do something in the next 36 hours. We have meetings at 11 p.m. and that's just not that abnormal. Low latency and throughput of tasks is very important. And like, okay, that all makes sense. But you're also asking that of like pretty pedigreed executives, right? Like I guess that's how you build big companies. But it's also, there's a rub for me where like the people that have been there and done that often don't want to do this work in this way. Like they don't really feel the need to like push themselves like that. Have you seen that?
I don't think they should be joining a startup, right? This is I think these things are table stakes. It's a venture. You're building something big, and you have to have the talent and you have to have the work ethic, and wanting to do it. Right? You don't have to. You can go do something else. You can join a big company. All those options exist, and people who are choosing to join a fledgling startup, they are in it to like build it into something big.
Yeah. Buck, how did you guys meet? When did you meet?
So Vipul and I first met sometime in the early summer, maybe late spring of last year. They had just pivoted the company to some extent, or at least began talking about what you'd done to pivot the company away from the initial idea, which was somewhere kind of at the intersection of crypto and GPUs, to the instantiation of Together that we think of Together as now. And I remember the first meeting. Vipul was very, very reserved and playing kind of his view of the business fairly close to the vest at the time, which I think is because there was just a lot of change and a lot of really exciting things on the Cub. And but I still really enjoyed the meeting and was very excited. And I think it was the second time we met that I just felt like there was momentum hitting me in the face from multiple different directions. Like there was some really exciting additions to the team. So bringing someone named Tri Dao aboard as the chief scientist, who's sort of a luminary in the field of distributed systems computing and how we really work with GPUs in the context of generative AI. There was a tremendous amount of momentum at the market level. I mean, I think this was at a time where it was becoming much, much clearer that the world was going to be bigger than OpenAI and Anthropic, and that there was going to be open source models. There was going to be businesses developing their own models from scratch, and therefore tremendous demand for compute outside of the big cloud providers and frontier model labs. And there was, of course, momentum in the initial release of their product, which is, I think, just something that we hadn't seen very often in terms of just like really violent growth in a short period of time. And I just come back to that second meeting. I just came out of it feeling just momentum, and that got me really excited. And not to mention the body of work that he's amassed before Together, which is very impressive, and we might get into. This is just a very experienced team in a very exciting market with a lot of momentum. That was my recollection of the second meeting.
Vipul, we've like worked together a bunch, and like you're in the KP portfolio. Like we hung out in Napa together, but it took me until like actually sitting down and studying, to Bucky's point, your body of work. It's fucking crazy. Like it is so amazing what you have done until this point. Like you could have hung it up so long ago. Did that ever cross your mind? Like,
not really. I'm truly excited by what I do, and I don't know what else I would do if I wasn't doing this.
Yeah, you after Topsy got acquired, like I don't know, whatever. Reports say more than 200 million. You spent almost 6 years at Apple. That surprised me. Like you don't strike me as someone that would spend 6 years at Apple.
It was surprising to me as well. I don't think that was the plan. Apple's a really interesting company. It's also, this innovation-driven culture. It's very aggressive in its own way, because every year there's a release that comes out every September. It's a new set of devices, a new operating system, and there is a company, the maybe 10,000 people. They're sort of marching towards this particular release, and I think that process was pretty exciting to be a part of, to drive some of it. I was they have this term DRIs for tentpole features. So I ran a bunch of different tentpole features, from launching a search engine to doing, deep learning on devices. And there's also, whatever you work on just goes out to a billion people.
Yeah.
Which is exciting and thrilling and is satisfying and for sort of the builder part of you. So it was fun, but I always knew this is not something that I'll do forever.
Yeah. Before we get too far ahead, like, can you give the 30 seconds on what does Together do?
Yeah, absolutely. Together is a AI cloud platform, a full stack platform. We build everything from the data centers to the developer APIs. And it's really focused on optimization, open source, custom AI models and applications. You can think of what OpenAI, Anthropic, and Google are doing around their proprietary models. They're building a developer platform where, companies can build applications on this. We are doing this for all open source models and custom enterprise models. So it's a very performant, high quality platform on which you can deploy and run AI applications.
Buck, so you led the A for us at KP. This is like a pretty important space in venture, and you get one pick in it as a firm. You know, you get to basically pick one horse in the race, and then you're like basically blocked out from every other horse. Like that means like there's a lot of pressure on you and the firm to like make the right decision on the horse that we pick. What was your thought process behind it?
So I think the first thing I would say there is...
Does the question make sense?
It makes sense, yeah. The first thing I would say is there's this ongoing debate that we've had as a partnership around just how we should be investing in AI broadly. And there's sort of a few different roads you can kind of walk down, and you see different venture firms walking down each one of these. Like I think the first one would be proprietary models will win out in the end, capture most of the value. So invest at them at all costs, right? And this is the likes of Anthropic, OpenAI, and potentially even more to come, those being the two. And what you're seeing there is those are companies that have tremendous revenue scale. They have proprietary business models, and they've reached that scale faster than any other company in the space. And so to date, those have been very exciting businesses and arguably like on a path to being great investments. The challenge with those companies, of course, is they have raised tremendous amounts of money at very high prices, typically anchored by non-financial investors who are working with them both as investors but also as partners to provide compute to them. And so there's a little bit of valuation distortion that comes from that I think for us has made it challenging to get comfortable with those companies. And I think at the same time, we've just had this accumulating belief that the world is much more nuanced than the kind of mainstream belief that these are the companies that are going to capture all the value. And I think it was for me personally when I saw Meta release Llama 2 that I started to really see a path to open source playing a substantial role in the ecosystem. And I think around that time, this was also when Together really started to make noise in the industry and have a product that they could put in front of customers and just sort of be known for their research contributions as well. And so I think the way we thought about it was there's a very high likelihood that open source and custom models are going to play a prominent role in the ecosystem. This is an absolutely fantastic and highly pedigreed team that is kind of defining what it means to build infrastructure for parties using those models. And having ruled out the proprietary model providers, it really feels like the best places to invest for us have been applications and infrastructure. And so to your point, there's really only one infrastructure company you can invest in a compute sense. And we felt like that company that was best positioned to sort of ride this wave of custom models and open source models was Together.
Yeah. And when you talk about the like trading that's happening amongst non-financial investors, you mean like Amazon or Microsoft basically saying, we'll give you an investment and in return you spend our dollars on cloud resources.
Those are certainly two examples. You could throw NVIDIA in that hat as well, who's been very, very aggressive and active in investing in startups with similar motives. And that's great for them, right? Their strategic objective is different than ours, right? Yeah. They're not thinking about generating financial returns. They're thinking about growing their business and increasing their earnings per share.
Yeah.
And so I think with that in mind, it's challenging to underwrite to the same kind of entry prices as they do with those investments. So this has been challenging for us to get comfortable with. And so we've all but ruled them out. And at the same time, we've just seen more and more atmospheric pressure building around companies wanting to own their models, wanting to leverage open source models for all the same reasons they leverage open source in the rest of their environment. And I think just seeing more and more companies kind of lean into that has made it clear that there's just going to be an absolutely massive opportunity in enterprise for compute. And that's the opportunity that we think has Together in front of and a chance for us to really build a great company with them.
Can I ask you a maybe random issue that's topical right now, especially since you worked at Apple, which is that Apple just signed this agreement. I really don't know what the details of the agreement are. I'm not sure anybody actually does, about partnering with OpenAI to feed the next generation of their phones. Like, do you have any thoughts? Like, do either of you have any thoughts on that? I don't know, like them partnering rather than building themselves?
I'd say like in some ways it is reminiscent of their partnership with Google for search. So in fact, when I was at Apple, we helped build Spotlight Search, which is, answers perhaps 10 to 15% of all the search queries that start on the platform. And for the rest, since Apple is not, committed to building a search engine business, or at least not committed to doing it today. It partners with Google in a very sort of, there's been stories about the structure of those deals. They have been very lucrative for Apple, and it's a great user experience for the customer. So I think it is, what I felt was the announcements were similar. There is a local model that runs on the device, and on Apple Cloud for more private sort of integrations across the device. And when you need to access a broader brain, it goes out to OpenAI. So I think it makes sense. I imagine, because there isn't, actually we don't know what the deal structure is, but assuming there's no ad revenue associated with this, I'd imagine that they may integrate other model providers and give users a choice around who to fall back on in some ways.
Yeah.
And we've talked about open versus closed a few times already in this podcast. And I think, just given the listeners are not all deeply technical people that are steeped in the world of AI, I think it would be interesting to hear you sort of give the bull and the bear case for open versus closed, right? And I think it's interesting to kind of start with the bear case, because I think there's much has been said about that, and it's almost as if there's like a consensus view, at least in the bubble that we live in, that it will be challenging to sustain open source for too long as the cost of training goes up and the like. And so I'd be curious to just kind of hear you respond to those concerns and maybe just outline them for our listeners, and then come back to the bull case as well.
You mean the bear case for open source? I think the way it is characterized today is that the distance between, the quality distance between open source and closed source keeps becoming bigger, because you need more capital investments to make better and better models. I'm probably not a great person to talk about the bear case, because partly, if you look at there's this really great graph that shows you accuracy of models on a benchmark called MMLU, which is, really captures the ability of a model to understand language.
Yeah.
And there's a graph of sort of, there's a line, closed source models, and then you have a much sharper line of open source models are about to supposed to intersect today, and which may actually happen with the Llama 405 release.
Which is Facebook's open source.
Which is Facebook's open source. And I think it is, this is happening not just because, Mark has a particular interest in this. I think it is software infrastructure. And we've seen this in software infrastructure over and over again, from operating systems to databases, that there is an open branch, and that open branch tends to sort of coexist with the closed branch. And because it's so general, can be applied to all sorts of use cases and industries where it may not make sense to build a company around a particular, a particular niche industry, and open source will generally go and fill up all of those. So I think that's happening here. The other aspect of this is, I think a lot of the vast majority of data in the world is closed. It sits with enterprises. They generate data as part of their business operations. And that data will, my contention is that data will go into open source models to sort of fine tune them and adapt them further more easily than it'll go into closed source models, because companies who have the data, they want to own the model bits, and they want control over those bits, which is fairly difficult for closed companies to do, because if they give away the model bits, they're kind of really giving away their entire IP. It's like giving away the source code of your software to every customer, and that business model has, that generally trends towards open source versus closed source. My feeling is that you will certainly have, I don't think closed models will disappear, but they will adapt more to applications and markets. And the broader market is going to be open.
And I guess the thing that I relate this to is the CapEx question as well, which is we're seeing hundreds of billions of dollars being routed to NVIDIA in exchange for their GPUs. And those GPUs, as you know better than anyone, are going into data centers to build giant clusters of this compute that can go into pre-training and serving these models. There's a lot of discussion now as to whether the industry might be over its skis on CapEx. And I'm just curious to kind of hear you dissect that question and help our listeners better understand what to make of all the money that's going to NVIDIA and what we should expect.
Yeah. So, one of the ways I think about it is generative AI core operations are very expensive. So you look at generating, you send a prompt to a model and it generates maybe like 100 words. Mm-hmm. During that time, it's, really taking up 8 GPUs worth of compute capacity. So it's just billions of matrix multiplications are happening to generate each token. So computationally, you have machines going from looking up information to machines thinking, and that process requires a lot of computation. So at a fundamental level, this is, we've never had anything like this before. This is a new sort of era in computing where machines have started to think and they require more compute and energy. I think I don't know, Bucky, if you're referring to, there was a story by...
Yeah, there's been stories, there's been equity research analysts saying that we might be at the top of the industry's potential in terms of how hard it will be to recoup the OpEx or the CapEx spent on all of these GPUs.
Right.
Why should we be concerned about that, or do you think it's overblown?
I think it's pretty... I think some of that analysis tends to attribute all the GPUs to, foundation models. That's not really true. I mean, Meta does Reels, for example. They are one of the biggest buyers of NVIDIA GPUs. TikTok, etc. These are CNNs. They're not transformer models, but they are, computationally.
Google search.
Tesla is building self-driving cars. So I think there is a bit of sort of misattribution, I'd say. There is a view like I do think this is going to be an AI super cycle. And whenever you have infrastructure built, you do get this, it's hard to synchronize supply and demand. So, there will be moments where the, supply is lagging. There'll be moments where demand is lagging. And I think we'll see that happen in bigger ways, I think, in the coming years. But if you look at the next 10 years or next 20 years, right, we are doing maybe 0.1% of AI that we'll be doing 10 years from now. So I think as...
You believe that?
I believe that, yes.
You believe that? And do you agree with the CapEx take?
Strongly. Yes.
Go ahead.
I didn't want to lead the witness, but I agree that there's...
well, you don't have very strong takes on anything.
NVIDIA's been generating a lot of revenue for well before ChatGPT, and they were generating it from these companies that were mentioned that have built products that also generate a lot of revenue, which is why they keep buying the GPUs. And so while a lot of the new purchasing is likely going towards pre-training of transformer-style models, the models that we think of as like ChatGPT being fueled by, there is a lot of revenue being recouped from this GPU CapEx that we see out there every day in our lives, from when we drive in the Tesla to when we search for something on Google and get served an ad, to when we see a reel. There's deep learning at the core of that. And as Vipul said, deep learning runs on GPUs.
Can I put you on the hot seat? Can you steelman the bull case of closed source? Like Vipul gave the case for open source and why that will, like, if you're OpenAI or Anthropic, like what is your strong stance there?
I think the valid points are the cost of training frontier models, as in like building the absolute best, most cutting edge models is going up exponentially, right? So we're looking at a future where it's going to cost billions of dollars to train these models in our lifetime. there is some obvious implications with just the sheer dollars that go into building a cluster of that size, right? That's a lot of GPUs, and few companies have the ability and resources to amass those kind of GPUs for $1 billion. So there's the cost piece. Then there's the power piece, which is as we think about like building these clusters, it's not just about can we get the GPUs, but you also have to like run electricity to the GPUs. And there's obviously a role the government has to play in solving that, but there's also just a sheer investment that's going to have to go into creating data centers that have access to that kind of power to power such a giant computing cluster. So I think for me, the strongest argument for why proprietary models will remain on the frontier is cost. I think that is something that we're all working through as an industry right now is will Meta sort of offset that on the open source side? Will we come up with more inventive and efficient ways to train and serve these models that maybe offset some of that for people that don't have the billions of dollars to spend? Or will nation states potentially play a role in wanting to keep AI open and build their own clusters and expose those clusters to people that have ambitions to build open source models? I think there's just a lot of ways this could play out, but the strongest case for why these proprietary research labs are well positioned to continue building the frontier models is resources.
Do you guys feel like this is somehow like we know together well, but like in some ways I get the feeling that like somehow this is not as well known of a company as it should be? Like it's almost like like when I was researching it, the like coolest headline I could find was why everyone's going gaga over Together AI, which was like kind of cool. That's pretty nice. But it was like kind of from like a random, it wasn't like Forbes, you know, where like if you look at the growth of the company, like whatever, Wiz went to 100 million in 18 months. We probably did it in half of that. And if you look up Wiz, that's in basically every headline across every major publication. What's up with that? Well, first of all, do you agree with me or do you disagree?
I think that's right. I would say we are very known in certain circles, right? If you go to research conferences around AI, Together is very popular there. If you talk to AI startups and or research teams at AI research teams at enterprises, they would know about Together. So we are sort of, we don't have a consumer product.
Yeah.
We have a strong product in an early market. So I think our profile sort of reflects that.
Yeah. Do you agree?
I agree. I think a startup that's growing fast can always do a little bit more marketing than it's doing, but there's a lot of nuance to that as well. But I think this is a very early space, and particularly the niche of the market that we serve is I think even more nascent than say some of the other more like developed segments of AI computing. And so let's talk about this a year from now and see if that's different.
And it's interesting, like to your point on a year from now, like how the fuck do you plan for a year from now? Like it's hard enough to do startup planning 6 months, 9 months, a year later when it feels like the ground isn't moving underneath you. In this case, like not only is the company moving at a breakneck speed that, like I said, I've never seen before, but the market is moving at a speed that we've never seen before. Like, how can you possibly do an offsite with a team to be like, this is what we're marching towards in a year? Like these strategic rocks, I don't know. It's got to be really hard.
It is. It's really dynamic. Things are changing.
Do you doubt yourself? Like, because like all of these, the confidence interval in most of these decisions has to be much less than you feel good about.
I think what I try to do is not have false precision. So, there are certain things that I know will be true and other things which, maybe sort of common wisdom for SaaS companies or enterprise companies, they may not just apply to us. So we try to sort of stay away from, ideas that we are not very confident about. And, till recently, we were doing quarterly planning. And it was, and we know we have to build so much software. We have to build so much on the go-to-market side. And the world will change, right? Somebody drops a new model, it changes the kind of ecosystem. And we try to, I think we're getting now to like 6-month planning. Things are, we know certain trends will continue to be correct. We know the kind of customers and ICPs that we have and what they want today. There are different customers in different parts of the adoption journey. So that sort of teaches us, these folks will be there tomorrow and we want to build. And these, this set of customers will move to the next stage and we want to make sure we have the right products for them. So it's also exciting because it's changing so much and there is new research, new use cases, new companies being formed like on a weekly basis. We try to be nimble and our culture is designed around that. We want to be really dynamic. It's also a strength for us. It's we can take something that comes out in research and get it into production really rapidly, whereas our competitors, especially incumbents who are kind of doing yearly planning or they just can't move that fast. So it really works well for startups, even in a space like infrastructure.
Vipul, whenever we talk, you always have like a cool, steady demeanor, and always I trust this guy. Like he's not gonna get too high or low on this stuff. Is that are you like a duck with your legs going crazy underneath the water, or is it actually are you actually able to stay relatively at a moderate equilibrium through? I mean, I don't know how else to describe it. Just chaos. Like it's nuts what's happening.
I mean, people tell me that I'm very calm and collected, so that's great. I'll take that. I do stress about things that are...
Do you actually?
Yeah, that things that are not going well or, if our thesis doesn't match the reality, we want to correct those things pretty quickly. So I do think about them quite a bit. I'd say certain things like obsessively till I have a clear, clear next step. So there's a lot going on, and that's sort of part of building something big. And I do enjoy it. I do like the sort of, the hard, stressful periods of building a company. They're satisfying in their own way.
Is it hard to think about anything else?
Sometimes, but I can disconnect. I meditate from time to time. That sort of helps me control my attention.
But like when you're at dinner with you're married, right?
Yes.
Kids?
Yes.
Okay, so you're like sitting at dinner, and like some new model is like the new Llama model is coming out, whatever, next week, right?
Right. I don't know actually.
Okay, like reports say. Are you not do you not have the 100-yard stare, where it's like to your point of obsessiveness? I mean, it's a feature and a bug, right? It's a feature for the business. It's a bug for you in many cases, like outside of work.
Yeah.
Do you not get the 100-yard stare?
I do, and I won't claim that I'm very good at sort of this segmentation of my attention towards work and personal.
Yeah,
it's hard, and I do, but at the same time, I think kids really help. You tend to sort of disconnect and be more in the present.
After you sold the first one to Proofpoint for a little over $100 million, then the second one to Apple. You know damn well what you're getting into the third time, and you happen to choose a pretty interesting space. Were you not like leaving Apple, figuring out what you want to do next, thinking fuck, am I really gonna do this again? Am I really gonna go back into the heart of this action?
I did think about it for a while. It's like, this is pretty fun. I like it. And I think what I came to, it's like, at some point, it's really about self-actualization, right? You may have a great job, but it's not the right one. We're lucky to have that choice to be able to step away from that and go pursue something that you want. And if you have that choice, I think it's pretty important to take it and figure out, try to see where it will go. So it was, I think it was a kind of a, not an easy decision, especially, I'd been there for like 6 years and was sort of getting settled. But when I thought about it, I just didn't think that was the path, being an Apple lifer or another company lifer would be sort of the thing I wanted to do.
Yeah.
Vipul, one of the things I find really unique about the company is the role that research plays in our strategy and its overall DNA, right? I think on one hand, research helps us identify where we can innovate in the product. And I think on the other hand, and no less important, is research's role in helping us just understand where this field is going and what the needs of the field and our target users have. I think it'd just be interesting for you to sort of talk about how you manage that, how that's been built up over time, and whether you agree with me or not in terms of that classification of the role research plays it together.
Yeah, I think research is pathfinding and really sort of inventing the path in many cases. There is so much we don't know about deep learning and these models that I think a lot of interesting work will come out of fundamental research. That's sort of the belief behind our approach to it. Also, what's happening as a result of the business model of, closed source AI is this was a very publishing friendly field till recently. Yeah, the ImageNet paper that kind of started it all, the Transformer paper from Google, they were all published, and that stopped happening. I would say 2022 was the time when the big labs just, clamped down completely on publishing, and papers became thinner and thinner. So there is, I think, there is the research community believes this is important, and they want to share this more broadly with, even I know a lot of researchers who won't take, who would refuse like $50 or $100 million and be academics and publish. And, partly it's kind of the incentives, but I think AI is different because it's a general technology. There is more of this like ethos there. And we've been, because of our open source approach, we can really work well together with academia and research. And we feel that together is going to be one of the forces that drives the field forward in bringing some of the best researchers in the world together, and publishing their work, which others build upon, which we can then use in our products. There is a lot of creativity in this, in the research side. I think a lot of smart people are attracted to it. So you'll see, we really hope to see a bigger academic investment around the world. And I think that's going to be one of the defining things, and one of the things that's very different about AI relative to software.
It kind of presents an interesting problem for the company, though, right? Like, if you bring in a bunch of researchers, these are generally not people that are interested in products and bringing those to market, et cetera. And then you have a bunch of company builders that are generally not thinking about the research. Like, that feels like a relatively new, but like a pretty extreme version of a paradigm of like managing those two things inside of a company.
Yes, I mean, I think there's some friction there always, and you want some, right? If you really constrain research to a particular theme, or everything that happens must have product value, you are just sort of reducing the aperture of research, and then you're also sort of reducing the upside, right? So I think it's something you have to think carefully about. We do have some teams like ML Systems. We are, I think, together is the best ML Systems lab in the world, I would say. And this attracts other people who are interested in the topic of optimization and alternate architectures. We don't try to limit, on a point what the team works on. I couldn't tell them that this area is promising and this is not. And if I started doing that, we won't get these promising results. We just published a paper on mixture of agents that combines 5 open source models in a novel way and produces, it's right now it's the top model. The combination is the top model in the world on leaderboards. That was a collaboration between a researcher and someone on our research team that happened over 3 months, and none of us were really expecting it to be that good. And the results were surprising. And this happens a lot. I'd say the ratio of successful experiments to experiments is fairly high, which is another indication of how important of an investment area it is.
Buck, by the way, you can answer this politically or not, but what keeps you up at night? When you think about Together, what keeps you up?
Bucky tells me.
So Vipul doesn't need to hear this. We talk about it every day. I mean, look, I think the obvious.
Do you text him with shit hey, did you see this? Did you see this? Yeah.
We text often, yes. Maybe too often. Vipul can weigh in on that. But look, I think the obvious concern for any AI computing business right now is coming back to Vipul's point about when you're in a super cycle, there's sometimes where supply outstrips demand, and conversely other times where demand outstrips supply. We are obviously in a period now, or at least in recent history have been in a period where supply has dramatically been dislodged with demand. Demand outstrips supply, that is, right? And so the question I think that we have to ask is, well, what happens if and when the opposite occurs, which is there's more supply than there is demand. So I think just having a strategy for managing against that risk, having a point of view on how that may play out and what could catalyze that supply demand imbalance, that the adverse version of it at least is something I think a lot about in this company. Thankfully, we have some really smart people, including Vipul, who are thinking about this in a way more thoughtful manner than their investors can, who have very good strategies as to how to manage against it. But I think what you will see is that some companies who have spent a lot of money on accumulating supply will find themselves in a financially challenging position if and when demand does change for the worse. And there's sort of like a WeWork analogy here that you can kind of come back to, which is you leased up all this office space and suddenly nobody wants to rent it anymore. So I think that's an obvious structural concern in this industry that we have to be really mindful of. But I give the team at Together a lot of credit for some thoughtful ways of managing against that. So I think that's number one. I think number two is as we just talked about, we've contributed a tremendous amount of really, really novel and interesting resources to the community in the form of our research. How we ensure that we also get maximum value from that commercially is another thing that we have to think a lot about. We just have so much talent in the building, and they're publishing such interesting things that I think are going to change the industry in some ways we may not even appreciate today. But then I come back to the Transformer paper, which was published inside of Google in 2017 and ultimately was commercialized by OpenAI. I do not want that to happen together for obvious reasons, and so I think a lot about that. So I'd say those are my two headline concerns.
That's a pretty fair, honest answer.
Yeah,
that didn't seem political to me. Yeah,
I would say they match what I think about. Well, is how can we be smart about this supply demand mismatch? Yeah. How can we do it just in time? How can we be? It's really about efficiency. utilization, predicting to some extent where things are going and changing those predictions like really kind of quickly. Also the business model, and we have we've done some reasonably smart things there. We are now in a position to be even more effective. And the create versus capture, I think that's always in an open source orient, and this is an open source and open publishing kind of business. The create versus capture dynamic, you can get it wrong. I think some companies have done it well. Databricks, they really have they have an open source. They have built a massive business on the commercial version, and it's a MongoDB's done it well, but it's generally not a easy and you need something very specific for the kind of business you have, and you have to figure out how do you approach it while not making the open source side just sort of lip service, like real authentic contributions.
And you want to protect that community.
While being able to capture value so that you can, build a company and continue that cycle.
Yeah. Yeah. Like, for example, like Docker maybe was overprotective of that community and didn't. Well, I think they missed an opportunity, and maybe it's coming all the way back around. But like for a while, they were pretty protective over that community, and they maybe didn't capture as much value as they potentially could have. Again, feel free either of you to answer or don't answer. But like, what's the biggest disagreement that you've had strategically? Have you had one where you're like?
I think we try to have disagreements as frequently as possible because that's how you get to the right answer.
Do you?
And I think the dynamic we have in I wouldn't say that, but we take different views on things, and we're very intellectually honest and do our best to get to the right answer for the good of the company. And I think the same is the case with the other members of the board, and the dynamic I think is really good and healthy as a result of that. But I would say one big question about just AI computing in general right now that applies to Together is which segment of the market is ultimately going to drive the long-term value. And I would say the two biggest segments of the market right now are these sort of research labs and AI native companies that are training and developing their own AI systems from scratch. And then you have enterprises that want to take open source models, open source frontier models, maybe even proprietary models, and feed their data into them to customize them and make them suitable for the use cases that they have. So I think there's this ongoing strategic question for any company in AI computing, which is do you want to serve that first segment or the second segment? And I think it's very unclear like how each of those are going to play out right now. And therefore the unfortunate answer is I think you probably need to hedge a little bit and continue serving both because there's just such tremendous growth in each area. While I think the group of research labs are obviously like much further ahead in their thinking and their development than the enterprises, I think that could change over time just because of how many enterprises there are and how much budget they have. And so I think that's one thing we often go back and forth on is just which of those segments of the market should we be prioritizing over the other and how. And I think I give Vipul and the team a lot of credit for just constantly taking in new information and recalibrating those views. And I think we tend to feel pretty good about like where we're at any given point in time on that issue because of that. So I think that's one thing. And then I think related to that is, Vipul said like you kind of have to update your priors on to understand where the world is going. But there's like this big mystery in AI right now as to like whether these scaling laws continue to hold for however many years they would need to make the existing CapEx build out worthwhile, right?
Can you explain that?
Yeah. So what I mean by scaling laws, and Vipul, feel free to jump in, is that there's this recent history has shown us that if you build larger models in terms of the parameter count of the model architecture, as well as the size of the GPU cluster that you train them on, and at the same time you give them more data, you get better results. And that's been almost uniformly true for the past, 5 to 7 years. And it's quite amazing. I don't think anybody could have predicted it, even the leading experts in the field. So now the question is like, when does that stop, if ever? Because if it never stops, we're going to be on a path to some kind of sentient AI system, and the world might be covered in GPUs and solar panels, as Ilyas Sutskever posited. But if it does, then coming back to this kind of demand supply question, it will have ripple effects there. And so it's very challenging, I think, for anyone in the space right now to take a strong view on that because of just how non-deterministic the path forward is in that area. And Vipul, I'm curious like what your thoughts are on scaling laws and whether there's anything you have to add there.
I think that's right. Nobody knows. And in some ways, your confidence in, like if we had a really high confidence, which is like, take the GDP of Europe and put it into, building the greatest model. And clearly, that's not happening right now. At the same time, we don't have any data that suggests scaling laws will stop working. I think we have computational and capital challenges in putting together more compute. We don't have mathematical challenges. So I don't sort of worry about that much because even the models that exist today, like if the progress were to stop, they're extremely useful, and it takes creative work to couple them to applications, and that takes time. So we have fantastic models today, and could be the basis for a fairly large industry and several big companies. That's sort of where I am on that. Is and I think that's what people are finding in general.
When you were doing CloudMark, which was the first company that you built, which, correct me if I'm wrong, was the commercialization of Vipul's razor, aptly named. You started that with you were at Napster, is that right? And then you started that with the co-founder of Napster? I had no idea.
Yep.
That's awesome.
So I moved to the US in 2000. I worked for a company. I'd written some open source software, which they were using as a company in LA that provided microwave internet service to movie studios. And they just like out of nowhere gave me an offer. I was sitting in Delhi. I had wanted to move to Silicon Valley. I'd read about it. This is during the .com phases, and I really wanted to move over, but it just didn't happen. So moved in 2000. The company kind of went under, 6 months later. And
into moving here.
After I moved there, yeah. So I was in LA, and this company's going under, and they're like, well, we have to let you go. And at the same time, I didn't really want to. I wanted to go up to San Francisco and think about starting a company. This open source software I'd written became suddenly incredibly popular around the same time. This is like early 2001, and I was on IRC. In fact, a lot of my early social network in the Bay Area was based on this internet relay chat. It was a chat protocol, almost like pre-web, where all the kind of nerds hung out.
It's like AIM for nerds.
Yes. Yeah.
Maybe you guys chatted at some point,
Yeah. And one of the channels I hung out was on the Perl programming language, which was really into. And Jordan Ritter, co-founder later at CloudMark, was like, I was like, hey, I think I need a job because this one is not working out. And he just like reached out to me. It's like, you wrote this thing, you want to come to San Francisco and we think about starting a company. That's kind of how it started. But I needed an H-1B visa. So, and we didn't have a company. So he connected me. He had already left Napster by then. So he connected me with Sean Fanning and folks who were still there. And I got a job at Napster doing DRM software, which I was not really into.
Basically to get your H-1B.
Basically to get my H-1B.
Yeah.
So that's, yeah.
And then you started the company together after a year? You two started the company after a year.
Well, we kind of started it immediately.
Yeah.
It was crazy because I was doing the Napster job during the day and CloudMark at night. And this app went on for quite a while. I was like 23, so it sort of worked.
That's awesome. And then you sold the company 7 years later?
We actually sold the company in more than 7 years later. I had already started Topsy.
Oh, you had?
Yeah, I was, CloudMark was interesting. We really kind of saturated the market. We were selling to ISPs, anti-spam software to ISPs and telcos. We pretty much had every ISP and telco in the world except for Google, except for Gmail. And so for me, and I was really interested in kind of reputation networks and social data and search and information retrieval. And these things were, so I started working on it on the side because I was just like so interested in what was happening, and that kind of turned into Topsy. So we hired someone to run CloudMark. I was sort of involved with the company for a while before, Topsy really took off.
You sold Topsy then before?
We sold Topsy before CloudMark. Yeah. The CloudMark acquisition was like a year later.
That's a good couple of years for you.
It was nice, yes.
And did you come, when you were in India, were you well off?
We were, we had a fairly middle class upbringing.
When you make that kind of money, that is a lot of money. Were you like, what the fuck? What? That's pretty.
Yeah, it was.
It's in a year, 2 years, you sell 2 companies. Right. It's pretty bang bang. Yes.
We had it in our bank account and that was it. Really, when I was at Apple, I was just so busy to it actually did not make that much of a difference to, our lives. Other than, I think one impact it does have is that it lets you assume more risk when you're starting something new, right? You're not, we'd be good stewards of capital, but it does allow you to think about building something bigger because you're less worried about the downside case.
Yeah. Did you take time between Apple and Together?
I did. Yeah.
A while, right?
Yeah, a few years. Our kids were born just around the time I left Apple, and and then COVID happened.
You were just hanging out.
We were just sheltering in place. It was very nice and domestic and a reflective time for me. And then I also got to, more seriously dabble in, I was really interested in blockchains and how, that's, like you mentioned, we started this out as how can we use decentralized technology to put together compute resources to train open source models. That was sort of the kernel of the idea behind Together. And, Transformers, read a lot of papers, got a chance to write a bunch of code, and it was a nice creative interlude. And it's really...
Were you not was it actually peaceful? Or did the itch just keep building over time? Did your temperature...
I think the latter.
Yeah.
I'm always interested in thinking about, what to do and what to build. And that's just sort of my personality. And I think it was singular in the sense that, becoming a father is unlike any other experience. So I think it, and having the opportunity to really sort of participate in that in a deep way, I think was great. But I was so excited to start together. Just I'd worked with Chris before at Apple, and we started going for walks at some point in early 2022, and came together pretty rapidly once it was the initial piece of research that my co-founders and Chris were working on. Soon as we had some results from that, we were pretty confident that this is going to be something meaningful and big.
The thought that I'm having is the timing was arguably perfect. Meaning, had you started the company right after Apple, it would have been way too early.
Right. Way too early. Yeah.
And in some sense, like you started the company maybe a year early, right? And then as the market developed and the timing became more opportune, I think you saw what is now the big opportunity. And so timing is everything.
Well, and it's interesting, like, can you talk a little bit about like it was really clever what you did. Like it turned out pretty good with the crypto miners and what that insight led to what you could then do on the AI side with Together. Like, can you talk about that a little bit?
Yeah. So, one of the, I would say all the way back in 2016, we were training models at Apple, and we would never have GPUs. We'd build CPU data centers. It's really easy to kind of put these things together. There were never enough GPUs. And there's always like AWS is building out more V100. V100 was the first chip that had, systolic arrays that make matrix multiplication fast. And everyone wanted them and they just didn't exist. And I think digging into that problem was sort of interesting, that the hyperscaler business models are not really built for GPU computing. And the folks who were building large farms of GPUs were crypto miners. So I think that was probably a deeper insight than we realized at that point, that this is going to be a much longer term trend where compute is disaggregating from, it has centralized over all these years, and now it's starting to disaggregate because this computing workload and where the margins are stacked in the market are different. We do, in fact, work with, many of those crypto miners have become neo clouds, GPU clouds now, and that's the bigger part of their business. And this is going to be I think it's going to be a pretty long-term transformation.
Crazy. It's an incredible story. What's next? Like, as you think about, what are we in, July? Like, next 6 months, if there was like one thing that you could do and you looked back on Christmas and said, we did it or didn't, is there a thing? I know it's like almost an impossible question, but
it's one thing. I don't think there is just one thing. I think there's a set of things that if we do successfully we have really sort of strong, we're talking about enterprise versus the startup market, we have really strong enterprise traction. Building that out, doing it successfully, I think that would be very meaningful. We're quite focused on that. I think you will see a lot of changes in the open model landscape, from Llama coming out, the bigger Llama versions, to some of the other models we know about. Building, tooling and infrastructure around that and adaptation layers for companies. I think we really want to be successful there. And we want to scale up. There is, the company's been doubling quarter over quarter, and that sort of starts becoming harder because your unit starts becoming bigger, which means you have to reorganize and sort of industrialize almost some parts of what you're doing to be able to scale. So that's another thing I think about a lot.
Anything else? Any questions? Thank you for doing this. Speaking of doubling every quarter, are you hiring? What are you hiring for? I was watching a presentation. By the way, when I was watching the Bloomberg interview, I rewatched it. It's the slowest I've ever seen Bucky talk. Is in the Bloomberg interview. He was so deliberate. It was interesting to see. I was watching an interview with you where it was a presentation, and the last slide was your hiring slide, and it was 50. It was every role, and it was like literally, hey, if you're any one of these,
right,
just let me know. It was literally every job in a company.
I think we were 20 people at that time. So the team was quite small when it was the founders you should know.
Yeah.
Right. Yeah. That was like right around the time we invested. It was about 20 people.
Yeah, it was 20 people.
Thank you.
We are 85 now. So we've filled many of those roles.
Wow.
We are looking for AI engineers, especially like systems engineers who can work on infrastructure, frameworks, write kernels. It's not an easy skill to find the market. It's fairly specialized. And we are also building out our data center team right now on and marketing, sales. So go-to-market and engineering are two really key areas.
What do you think how many employees do you think you're going to have at the end of the year?
Around 125.
And then double again next year?
Possibly.
Last question. When you hear the word grit, what do you think of? What comes to mind?
What comes to mind is being able to continue to do things even when things get hard. And a sort of sense of confidence that if you continue down a path that you pick, that there will be success at the end of it.
Gentlemen, thank you.
Thank you.
Thanks. Appreciate it. This was fun.
Thank you.